Stream is excellent. It's good. All right. What's up, guys? Just doing a little bit of work on stocks. If you have a question, type it into the chat. Otherwise, you can watch me go through some processes here. Who is that? All right, just checking the stream health over here. It looks pretty good. I'm gonna be going through some tasks. If you got some questions, you could pop them into the chat. So in the background here, I have the companies that make the most money I think these are generally all the companies that have public data. There might be some companies that don't have public data that aren't going to be in here, but I think this includes private companies as well. It's the most profitable companies in the world. So the most profitable company in the world, according to this right now, is Apple. 112 billion US dollars per year. So the 100 bill a year is kind of where the chart kind of peaks out. So if you want to get an idea of like what is the most amount of money like an organization could make, I think tax receipts might be higher from like governments. But in terms of like, you know, a company, a business, it's 100 bill. Apple, Saudi Arabia Co., Microsoft, Google, all in 100 bill. They're really close to each other. It's interesting how that works out. So one company doesn't really dominate over the other ones. Berkshire Hathaway, which is like, you know, the Warren Buffett, Charlie Munger group, 89 bill. So keep in mind that net income is different from market cap. But net income is more important because the profitability of a company is really what defines it, if you think about it. Right? Let me adjust the other screen here. The profitability of a company is what defines it. I don't see, okay, so my investment style, if you want me to know how am I so good at investing, I look at profitability. Net income, earnings, right? Everyone's talking about earnings all the time. What the hell is this? Everyone talks about earnings all the time, right? For some reason in the media and when, you know, you research anything to do with investing or anyone has a new opportunity, it's always companies that don't have any profitability. They don't make any money. There's no net income. That's really important to look at. I mean, it's so simple, such a simple idea. You know, you want something that cash flows, something that makes money. That's why a lot of real estate investments kind of suck too. There's not a lot of cash flow, not a lot of income from those, you know, investments. People are banking on equity appreciation, right? But the thing with net income is a lot of times, I don't want to generalize too much and say something that's not true, but a lot of times the net income is going to be pretty stable over time. It's something real, right? Net income can be used for a lot of different purposes. You could reinvest in the company. You can pay out dividends. You could buy back shares. So the money is real. The money is real. I think a lot of people that are getting into investing, people that aren't really financial people, they don't understand that the money is not fake. The money is real. It's real money. These companies have real money. That's $100 billion that Apple has of real cash, real money in their bank account. I mean, I don't know. We could investigate the specifics. Is it just cash in like a bank account, or like how is that 100 billion? What do they do with it? But as far as we are concerned from an accounting perspective, it's just the same way you have a bank account. Their bank account says 100 billion in net profit, right? So they have cash on the books. They have other assets as well. But in terms, you know, revenue minus expense, you know, in the most basic way, subtract, you know, liabilities, expenses, all that kind of thing. You know, at the end of the year, there's 100 billion on the books in net income and new money. So that new money, that income, that money that was created, new value. If you own a piece of that company, you own a piece of that net income. It's pretty simple. If I own half the company, I'm never going to own half the company. If I own, let's not say never, but I don't own half of any of these companies. But let's say I did own half the companies. You know, some of the entrepreneurs or founders own large chunks. They'll own, like, I don't know, 20% of the company. But let's just say if I own half the company, I own half that income. So the managers of the company get to decide what they're going to do with that money, right? And like I said, so they have a lot of options. They could keep the money in the company. They could pay dividends. A lot of companies pay dividends. The thing is, a tech company like Apple, it's not going to pay a dividend usually. But what they will do, this is what they did 2024, is that they buy back shares. So they're like, well, the stock price is too low. We're going to buy some of that stock, and that boosts the stock price. So if you're a shareholder, you have a share in the company, you know, your $100 share is now $150 or whatever it may be, right? So you have $100, your shares are worth $100 per share. Now they're $150 per share because the company bought so much shares that it boosted the price of the shares, right? So that money, that's real money, and that's real money that goes back to the owners. Dividends. You know, most companies don't prefer to issue out dividends because dividends have a different kind of taxation. But also, the other thing is, if they reinvest the money, or they use the money for operations, or they do something with that money as a company, if it's a growing company, you know, you can expect more income in that company. So the company's enterprise value, the value of the entire company is going to go up. You know, the earnings are going to go up next year. They could put that cash and put it on the books. It's just cash sitting in the bank of the company. You know, so they earn 100, then they earn 100 the next year. Now their cash balance is growing. There's more and more cash in the company. That's your cash. As a shareholder, you own a percentage of that cash. So this is a very basic, very simple concept, but the thing is, most investments that people talk about in the general investing, talking public, there's no value to those investments. It's just all bullshit. It's all BS. That stands for bullshit. So, yeah. Let me give you an example. So, NFTs, cryptocurrency things. How much net income comes from those investments? Almost nothing, right? Some people, I'm sure someone's going to explain how those things generate cash, but almost all of them generate nothing, right? So when you're not generating anything, you have some NFT that doesn't generate anything, you're just banking on appreciation that someone else is going to come and pay you more for that thing. So there's no money naturally coming into that asset. It's just kind of a crap investment. It's risky because you could lose 100%. If people decide it's not worth anything tomorrow, it's not worth anything tomorrow. But if people decide that Apple's not worth anything tomorrow, you still own the assets of that company. You still own that bank account with the cash in it. You still own, you know, the inventory, the iPhones, the stores, the people, you know, all the things that are associated with that company. So that's a way better investment than a speculative one. What's another example? Atomic stuff. You know, recently there's a lot of companies that are like in the atomic space, nuclear, that kind of thing. No earnings. You know, someone I was talking to last year actually was showing me an investment of a car company that Saudi Arabian money is investing in the United States. And I looked in the books. You know, I did this really quickly. And the cash flow is negative. The earnings were negative. It's a speculative asset. Oh, in the future, in 5 years, that thing's going to be generating billions. But right now, you know what? It's not generating anything. And you know what happened over the year? The stock went like way down. So it was no reason even to consider that investment. I didn't invest anything. The person I was talking to decided not to invest anything into it. And it was just kind of like a dumb idea because there's no cash coming in that company. There's no net income. So, bottom line, buy companies with high net income. If you don't know what to start with, you have a good list right here. I mean, if you just randomly bought some of these companies over here, you'll probably make money. Even though the valuations, the PE are very high, you still might make some money from those companies just because that's a way better investment than some NFT or something that doesn't generate any income.